Hello and welcome to the Business Standard Morning Show. I'm Kanishka Gupta and let's have a look at the stories for the day. Clouds of recession gathering over the US skies are increasingly casting a dark shadow over its domestic consumption and imports. And the effect is being felt about 12,000 kilometers away in India, where the export industry is bracing for harsh weather. Some exporters are already seeing a dip in new orders, while the margins of the IT sectors are declining. So, should the Indian exporters worry? This report has more.
The old adage goes that when the US sneezes, the world catches a cold, and this time the country caught COVID-19. Notwithstanding the repeated attempts by its central bank, the likelihood of the world's biggest economy slipping into a recession within the next 12 months has shot up to nearly 50% from 30% in June, economists in a Bloomberg poll predicted earlier this month. The US is India's biggest export destination, and growing fears of a recession in the US is keeping Indian exporters on the edge, as a slowdown in demand affects export growth negatively here. In the first 2 months of this financial year, India exported goods worth $14.3 billion to the US, making up 18.2% of the total exports. Farida Group, one of India's biggest leather and leather footwear exporters, says it has started to see a dip in volume for new export orders from its American clients for the 2023 summer and winter seasons, with a much sharper decline for winter orders. The group gets 45 to 50% of its business from the US. It is not expecting a slowdown in the short term, although the group has seen few order cancellations. Things, however, seem to be worse for ready-made garment exporters, who have already started to see a slowdown in orders.
Right now, we are servicing for the winter. That is okay. The order has been placed much before, 6 months, 4 months before. So right now our production is going on well, almost the peak. Then October starts summer 2023. That is already been placed. The order has been placed. That is why it has not been reduced. Wherever the order has not been placed yet, they have indicated that there may not be much of an order we can expect. That means a reduction of around 14-15% of the volume. But mostly they are worried about the next winter. There they are indicating a reduction of almost like 20-25% in volume and value. Several customers from US are showing that. One of the reasons is they went out and worked much because in the pandemic they didn't buy anything. Then after pandemic there was a huge demand and they were not able to supply. Two major customers have cancelled around 100,000 pairs, one cancelled about 60,000 pairs. That's a big number. We are a little worried about that cancellation. Wherever we have bought the material, we are not accepting the cancellation. I was talking to my friends in garment industry. They are also saying the same thing. Lifestyle products are all the same. The customers are almost the same. The brands are the same brands. In fact, they say they have slowed down right now also.
But things are not as gloomy on the IT services side, despite the top 4 exporters missing their first quarter profit estimates. TCS, HCL, Wipro and Infosys also reported a decline in margins amid an increase in employee costs to tackle high attrition levels. But they are seeing a strong deal pipeline. Citing a strong demand outlook, Infosys on Sunday raised its full-year revenue growth guidance to 14 to 16%. CEO Salil Parekh acknowledged that there have been discussions on recession and interest rates going up, and that he sees pressure of this on some segments like mortgage businesses within the financial services sector. Wipro CEO Thierry Delaporte recently said there has been no slowdown or pullback in IT spending by the company's clients. TCS CEO Rajesh Gopinath too says he expects the demand environment to likely stay very robust.
at this point in time, the pipeline is healthy. In fact, to the extent that some providers are trying to chew more than they can swallow, we don't see that this recession is going to impact in a short term or medium term at the moment. We never know that how the IT spending will change. Gartner's latest forecast has not indicated a drastic drop, but we will have to evaluate it again in the next quarter, because the things change very quickly in the market as well sometimes. But as of now, I can say that not a very big concern from either the providers or from the demand side as well. What we are seeing is that once the transformation starts, those initiatives will be very hard to stop in between.
With the IT spending plans of their clients intact, the managements of Indian IT majors have provided positive commentary on the near-term demand scenario, yet they remain cautiously optimistic. On the other hand, Indian exporters of consumer items will be hit hard as households in the US cut their spending. There may still be a silver lining. Even if the US does fall into a recession, it is likely to be a mild one.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Meanwhile, unperturbed by these headwinds and riding high on tariff hikes, Reliance Jio logged a 24% jump in its net profit in Q1. And now the country's largest telecom services provider and 3 other operators are set to lock horns in the auction for 5G spectrum. So, will this be an aggressive battle or a muted affair? Will this be a turning point for India? Business Standard's Nivedita Mukherjee does a status check.
It is here in this building that the idea of 5G spectrum auction was formally floated for the first time 5 years ago. The Telecom Regulatory Authority of India, or TRAI, issued a consultation paper in August 2017 highlighting the significance of 5G or fifth generation telecom services.
5 years later, all eyes are on Sanchar Bhavan. The Department of Telecommunications, or DOT, in Sanchar Bhavan will be the center of action as bidding by telecom operators begins in some time. India has seen several telecom auctions before, some aggressive and others not even lukewarm. How will this one be? What's the mood in the industry? Dr. S.P. Kochar, Director General of Cellular Operators Association of India, had this to say.
5G auctions, we were waiting for this eagerly. So hopefully things should work out well.
So how long do you think it's going to go on for? Will there be aggressive bidding or is it going to be a short affair?
Your guess and my guess, I suppose, are the same. But if you look at the earnest money deposits, it appears that we are going in for aggressive bidding.
So who do you think will be the most major beneficiary of the 5G services? Enterprise?
Enterprise.
What is the timeline that telcos are looking at for commercial launch?
By end of the year, a commercial launch of some nature will happen.
Not on 15th August.
15th August has been pushed a little bit, not too much, maybe a month when the government. I'm not free to announce the dates, but it'll happen within about a month or so of 15th August.
How ready are we for 5G?
We are quite ready. I won't say that we're fully ready.
By how much do you think ARPU will go up? The prices will go up with 5G coming in?
See, the prices are bound to. I mean, this I'm talking about personal assessment. I do not have any insider information. So the disclaimer is that I am not articulating what the telcos are thinking about. But India is a very price sensitive market. and as far as possible, that all telcos will avoid increase of price. But having said that, they have to also make up for what they have invested.
Dr. Kocher is cautiously optimistic and watching the space as telcos gear up for the contest. Well, telecom majors sound bullish. Bharti Group Chairman Mr. Sunil Mittal has said his company would be at the forefront of 5G in India. RIL Chairman Mr. Mukesh Ambani is high on the homegrown technology for 5G.
Once Jio's 5G solution is proven at India scale, Jio platforms would be well positioned to be an exporter of 5G solutions to other telecom operators globally as a complete managed service.
Going by the earnest money deposits by telcos, Reliance Jio is on top, followed by Bharti Airtel and then Vodafone Idea. The Adani Group is starting small. The 5G trials conducted by telcos with their tech partners suggest big play.
One name has been doing it for more than a quarter of a century now. Airtel. Hey, we stand on the cusp of a new frontier, 5G.
Yes, there's excitement in the air, but how real is it? Mr. Prashant Singhal of EY and a long-time telecom watcher believes the auction will be muted.
Yeah, I think the auction is going to be a fairly muted auction with obviously, we can see the telcos being large bidders for the spectrum, and there's enough spectrum available in the auction in each of the bands or most of the bands. And with the EMDs which have been given, I think we think that the auction would be muted. Should get over in maybe a couple of days, and I think we should see closer to maybe a 1 lakh crore kind of a number from the auctions as the total cleared spectrum, around about maybe 10,000 crores plus and minus.
And since you say that it's likely to be a muted auction, what are the implications for overall 5G rollout in the country?
So the 5G rollout would take its own time, and I think the important thing is that India is still behind on 5G. When I say the auction is muted, there are no new participants other than one, and that too with a very small EMD. So it's not that there are new participants who have come in, which should have been maybe the case. If the spectrum prices were lower, then more spectrum would have gone in. But we'll still see rollout since companies are going to invest in spectrum, and I think it's in their interest to monetize the spectrum as soon as they can and not wait for anything else. Though globally, we haven't seen 5G creating a lot of revenue upside from an operator standpoint. It obviously creates a very good customer experience because of low latency and very high speeds.
5G will mean huge investments by the industry, and revenue may remain a distant dream from these services. But what will it mean for the consumer? Will it imply better connectivity at higher prices or status quo? Nivedita Mukherjee for Business Standard, New Delhi.
यार मत पूछ यार, फिर से स्टॉक्स में फंस गया। तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर। इसमें बहुत तामझाम है। तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 Paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
A status quo for India's IT industry would have been great news, but it's not. The June quarter results of top-tier IT companies were disappointing as the profitability margins came lower than estimated. The underperformance was led by the usual culprits of persistent attrition and high wage costs. With the US recession looming on the horizon, are these reasons to worry about the sector's health? Let's find out in our next report.
Despite decent revenues, profitability of large-cap IT companies took a hit in the April-June quarter amid higher-than-expected margin erosion. Barring TCS, whose profit grew slower than expected, Wipro, HCL Tech and Infosys imported a sequential decline of 6 to 17% in net profits. The reason behind this remained the sharply elevated attrition rates and rising employee retention costs. Attrition levels for the Tier 1 companies continued to be around 20% or more this quarter, with Infosys in the lead among peers. Wipro reported a marginal drop, while others recorded a significant rise from the March quarter. The attrition rate, analysts say, could soon be bottoming out.
Most of the IT companies have come up with subdued performance, mostly below analyst expectations. A few performers have been from the mid-cap space. One of the continued bother is the attrition level, which in turn has an effect on the margins due to the increased employment-related costs. However, channel checks suggest that it could be topping out. Most of the managements have been upbeat on the order flows despite the expected global slowdown, especially in important markets like US, Europe, and UK. I would possibly take this positive management commentary with a pinch of salt, as the discretionary spend budget may in fact get slashed if we really witness a slowdown. The next two quarters could be slightly weak for this sector, and post December, we could hope for a upswing or a revival, as most central bank interventions would have been done by then.
That said, experts believe that the IT sector remains a positive bet given the recent correction. According to HDFC Securities, risk-reward is presently favorable for Tier 1 IT companies as current valuations imply a modest growth ask rate, while mid-tier IT firms will sustain their growth premium. Sharing a similar view, Mitul Shah of Reliance Securities says that the valuations of the sector have become inexpensive.
Nifty IT index has corrected by nearly 26% from peak level because of the valuation contraction. But after this correction, these companies are now trading close to their historical long-term average PE valuation. Though still it is not very attractively valued, there is possibility of some pressure on the stock prices over near term. But we believe that now it is no more expensive and slowly becoming attractively valued. So we advise to accumulate at every decline with a long-term positive view on the stock.
Today, market action will be guided by the earnings season. Asian Paints, Bajaj Auto, L&T, Sanofi and Tata Power will be on the radar ahead of the Q1 results. Among other key events, the much-awaited two-day policy meeting of the US Fed will begin later today.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
On Monday, Bloomberg reported that Chinese authorities had forced some of the biggest companies, including iPhone maker Foxconn, to operate within a closed-loop restricted system for 7 days to battle a COVID outbreak in Shenzhen. Such unpredictable regulatory crackdowns have forced a rethink about China across the world. Such actions have wreaked havoc on the global supply chains, due to which the China Plus One strategy gained traction. Large companies in the West are increasingly exploring alternatives to China. Our next report talks more about this plan and why India is struggling to register its name in the list of favorite investment destinations. Coined way back in 2013, it is a global business strategy. China Plus One, or just Plus One, refers to a strategy in which companies avoid investing only in China and diversify their businesses to alternative destinations. Where did the need for it arise from? For the last 30 years, Western companies have invested heavily in China, attracted by its low labor and production cost, as well as the considerable and growing size of its domestic consumer market, leading to an over-concentration of their business interests in China. In late July, a grouping of 18 economies, including India, the US, and the European Union, unveiled a roadmap for establishing collective supply chains that would be resilient in the long term. The roadmap also included steps to counter supply chain dependencies and vulnerabilities. This can be seen as a part of the overall China Plus One strategy. Officials and companies in Japan and the United States had begun mulling in diversification strategy away from China as early as 2008. However, it was only towards the end of the last decade when US-China trade tensions were at their peak that China Plus One gained steam as an alternative strategy for MNCs. The driving factors range from China's cost advantage diminishing in recent years to growing geopolitical distrust between China and the West. Other business challenges have also emerged. For example, foreign technology companies have begun exiting or downsizing their presence in mainland China because a strict data privacy law that specifies how they collect and store data has been brought in. China's Personal Information Protection Law came into effect in November last year. Among other requirements, companies must now get permission to send personal user information abroad. The new regulation has raised compliance costs and created uncertainty. Also, companies that break the restrictions will face hefty fines. And then the COVID-19, which continues to make its presence felt. China's continuing zero COVID policy meant that there was industrial and supply chain disruption. Then there was the associated container shortage. All of a sudden, lead times went up and the global supply chain's reliability took a hit. As a result, the US and Europe, with their sourcing dependence on China, were forced to look at other locations for both reliable supplies of components and materials and production cost advantages. Beijing's zero COVID policy, the resultant supply chain disruptions, and high lead times from China ended up giving a fillip to the China Plus One strategy for many global firms. Clear winners of the China Plus One model have been the EU, Mexico, Taiwan, and Vietnam across sectors such as machinery, automobiles, and transport and electrical equipment. According to experts, apart from marginal gains in the machinery sector, India, however, did not significantly benefit from this trade diversion. But why? India's declining participation in global value chains has been one of the reasons. Its trade policy has been more protectionist than the other developing countries and has not been driven by the objective of integrating with global value chains. India has also been hesitant in forging preferential trade agreements. It shied away from the regional trading arrangements. Clearly, India must reorient its trade policy to take advantage of the increasingly popular China Plus One strategy.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Meanwhile, some reports suggest that US President Joe Biden is mulling lifting some of the tariffs slapped on import of Chinese consumer goods by his predecessor, Donald Trump, about 4 years ago. That is all for today. We will be back with more news and analysis on our next episode. Stay tuned and thank you for watching. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.